This morning, Bitcoin had a flash crash, continuing its decline down to levels that it hasn't seen since, well, I guess it was only about 2 weeks ago. But why is Bitcoin on the decline, and why is cryptocurrency doing this to us? Well, like I've been talking about in a lot of my previous videos, we're probably going to be seeing a supply crunch right now, and it looks like liquidity is already starting to dry up. According to this article on Barron's, it says liquidity is a critical factor in markets that allows assets to be bought and sold quickly without drastic moves in price. Not all trading venues are created equal though, and variable liquidity may be seen across markets at a time of significant change for Bitcoin because of the launch of a new Bitcoin spot traded ETF, and this may be contributing to choppy trading and could see more flash crashes if Bitcoin continues to sell off. Overnight on one exchange, BitMEX, Bitcoin crashed down to $8,900 due to a large number of sell orders totaling $55.5 million. So that means that somebody went down the whole order book and bought up all of the Bitcoin all the way down to about $8,900, scooping up all of that Bitcoin from panic sellers, because anytime that there's a sell, there also has to be a buyer. And while that does indicate that a lot of people were willing to sell, that also shows you how many people are trying to scoop up so much so quickly that they can just go through all of the sell orders and push the price down to $8,900 on one exchange. It says for an asset class that is worth over $1 trillion, a $55 million selling order causing a crash of that magnitude certainly doesn't suggest a lot of liquidity. And I think we're just going to see this kind of stuff continue because more and more institutional investors are trying to get their hands on Bitcoin, and they keep offering it to more clients with a whole bunch of money that are going to try to scoop it up. And as less people are going to be willing to sell their Bitcoin, I think there's going to be a lot more supply crunches in our future, and most of them are probably going to be sending us skyrocketing to the upside. The real reason why we saw that flash crash this morning is because we've seen more than $640 million being liquidated in the past 24 hours, with $489 million of that being longs. And according to CoinGlass, it looks like in the past 24 hours, 220,000 traders were actually liquidated, with the largest single liquidation happening on OKX, with a value of $12.25 million. And a few hours ago, it looks like it was even worse, with Watcher Guru posting that there was $663 million liquidated from the cryptocurrency market in the past 24 hours. So maybe we just needed to liquidate some of this leverage and get some of these long and short positions out of the market so that we could get ready to explode back to the moon again. But like I keep saying, I think that these institutional investors are going to scoop up all of the Bitcoin that anybody's getting ready to sell, and they have much bigger bags to play with when it comes to dollars, so they're going to be able to scoop up pretty much anything that anybody's willing to sell, and we might not continue down very much further because there's just not that much Bitcoin available on the market for them to buy. Michael Saylor isn't being shook out by this recent dip. As a matter of fact, he's been taking advantage, with Watcher.guru posting that MicroStrategy has bought another 9,245 Bitcoin, totaling $623 million, whenever it was purchased, I guess. But as long as the government continues to print dollars and Bitcoin continues to have a max supply of 21 million, I think any of these dips are going to be a great buying opportunity, because it's just a matter of time until the Fed starts to add back to their balance sheet. And every time they do, the stock market and Bitcoin and everything else absolutely explodes in price. And that's when we start to see the effects of all of the printing that banks and the government have already been doing, even as the Fed has been trying to reduce their balance sheet. Not only does the national debt go up by $1 trillion every 100 days now, but the banks have also been printing money this whole time, and as soon as the Fed gives them the go-ahead by lowering interest rates, they're going to ramp up their lending again, and this is what really accelerates the printing of dollars.
The fact is, most people think that what a bank does is lend you money that someone else has put in the bank previously. But what a bank actually does, what a commercial bank does, is to create money from nothing and then lend it to you at interest. If I do that, if I manufacture money in my own home, it's called counterfeiting. If an accountant creates money out of nothing in the company accounts, it's called cooking the books. But if a bank does it, it's perfectly legal. And so long as you allow fraud to be legalized, then all kinds of problems are going to pop up in the economic system, which you can't do anything about.
Private banks create money out of nothing and lend it at interest. Now, that sounds absurd. When I teach sophomores, about money in banking and how banks, they never believe it. And so you have to go through it again and again. Yes, banks really do create money. They really do. Here's how it happens. And it's absurd, and they're right to doubt that could possibly be what's really going on. But it is.
Now, if the banking lobby is very strong, they're going to say, well, we don't want to change the system. We're making so much money out of it. What we have to do is, A, try and convince the people that it's their fault, that their wage claims are too high, and that's why we're having lots of inflation, or people are speculating on housing, and that's why house prices are going up. What they're not going to say is that this is happening because banks are creating money out of nothing and pumping it into the system, and that's why prices are going up.
That's exactly why Bitcoin was created and why we're using it to escape the traditional finance system. Coincidentally, that's also why the government and the banking system is trying to attack us for it. But there's only so much they can do, and as this technology continues to reach mainstream audiences, the supply is going to become more and more constrained, especially as we reach the halving date, because there's just nothing you can do to print more Bitcoin faster as more people use it, whereas it is human nature to do that with everything else. If people want to buy up all of the gold, then we're going to dig more of it, and if they want more dollars, then we'll print more. But you just can't do that with Bitcoin, and that's what sets it apart. Here you can see the flash crash that we saw this morning, with Bitcoin dipping all the way down to about $62,000 before finding support at this downward trending support line, which represents the bottom part of this bullish flag that we've been stuck in. And it's not the prettiest one, honestly, but if you look for a flagpole, then it might go all the way down to this wick right here. But conservatively, let's take it up to the bottom of the body of the candles. And if we extend that to the breakout point, if we do break out here pretty soon at this upward trending resistance line, then that could mean that Bitcoin is going to take a run up to about $69,500 to $80,000. In total, since the top of the market, it looks like Bitcoin did make a 15% correction. But if you want to see the worst case scenario, then go watch my video yesterday, because I covered how low I think it can go based on the production cost and the upcoming halving. But I don't necessarily think that we're going to make it down that low, because, as I said, we've never had institutional investors and these big entities buying up this much Bitcoin. And I don't know how much downward pressure they can cause, because there might not be enough people willing to sell, especially with it being enough for them to fill the orders that they need to buy. So maybe we're going to see Bitcoin break out of this bull flag here in the next day or two. But it could definitely continue lower, because 20 to 30% is usually what we see in bull markets. But over time, these dips continue to be less and less. And if I zoom out here to the daily chart, it looks like we could possibly put in a hammer candle here if we close basically any higher than where we're at right now. So maybe we've reached the bottom of the downward pressure, and maybe we will see a bounce here as the institutional investors continue to accumulate from people with smaller bags. But it looks like maybe the buy the dip sentiment is starting to re-enter the market as retail investors come back in. And while this definitely could continue to the downside a little bit more, whenever it does bounce, it's probably going to be moving pretty quickly. And I'm just going to be holding on like I did throughout the bear market, because whenever this thing gets pumping again, I don't want to be chasing candles. So let me know what you guys think in the comments. Is this a buy the dip opportunity, or is this the top of the market and we're getting ready to go back down where Capo thought we were going the whole time? Either way, thank you guys so much for watching, and don't forget to hit that like and subscribe button. But most importantly, don't forget to do only good every day, and I'll see you next time. Bye.